There, Boeing and Cat were actually leading the Dow.
That's crazy.
For now, Boeing is. Let's get to Bob Pisani. Bob?
Well, we're about a quarter of the way through earnings season. More than 100 stocks in the S&P have already reported, Carl. Let me just show you what's going on with the sectors, because the earnings stories are very much impacting the sectors today. So look, semis down a lot, and that's primarily because of what we're seeing with Texas Instruments. We're talking about a company with a $110 billion market cap. That big, it's going to move the indexes it's in. It's down about 9%. That's influenced. Their transport's influenced a little bit by Norfolk Southern, a bit below expectations. Consumer discretionary, well, we had a little bit of weakness in Whirlpool in Latin America. We had some other issues going on with them. Under Armour, Chipotle, also on the weak side. Banks, industrials flat, and I think that's very interesting. Now, we've had three very notable outliers, real disappointments for the earnings season so far. FedEx, McDonald's, Caterpillar. Is there something really big going on here, or are they sector specific? FedEx, I think, is sector specific or company specific. McDonald's may be sector specific. There was a lot of chicken wars going on at the time of their reporting, could account for the lower than expected U.S. same-store sales. Caterpillar, I don't think you have that excuse. This is clearly the poster child for global growth, and they clearly indicated that in their numbers. Here's the question. Why are we only down fractionally? That's what everybody's trying to figure out. So these numbers don't look very good on the surface. Here's the three big subsectors of Caterpillar. Mining down 12%, construction down 7%. Energy, you could say, well, that's at least not that bad, only down 2%. But these are pretty notable numbers on the downside overall. I think the question now is, does the stock reflect those low expectations and do the earnings? And I think that they do. And I think that explains why we're not moving that much on Caterpillar. So the company specifically told us what the problem is. They said we're seeing reductions in inventories and we're seeing end user demand flat, and they anticipate this will continue into 2020. So let's just take the company's word at it. Inventories are continuing to be reduced and end user demand is going to be flat going into 2020. What's going on with the company, with the stock this year? Earnings are only up 4%. That's better than some companies, but not anywhere near spectacular. Revenues are essentially flat on the year. And where's the stock gone? It's way, way underperformed the S&P 500, which is up 17, 18%. So the company's performance is reflected in its stock price and its earnings and revenues. Here I want to just show you something. This is a chart going back 7, 8 years now on Caterpillar. At one point this year, we were at 115 or so. We were back at levels back in 2012. This is 2012 right here for Caterpillar. So you see the stock's jumped all over the place. And this year it's gone up and down with every twist of the tariff wars. My point is that Caterpillar is essentially going sideways. This big spurt here on the tax cuts last year. I don't think it's outperforming in any particular way, and I think that's indicating of the company, and that's why we're seeing flat here. My point is, going into 2020, you may see this company, as long as you've got a paradigm where you're going to get flat growth or 1 to 2% GDP growth, maybe a modest amount of fiscal stimulus in Europe, and maybe just a truce on the China wars, you may have the stock going flat. Guys, back to you.